Good morning. Welcome to the morning market briefing. Today is Thursday, August 6th, 2026. Hope you're doing well. We've got a lot to get to today. Some more on the straight, maybe straightening that out. We have another coding platform, another coding AI platform that's now one of the top ones, and memory providers getting smashed. SK Hynix was down 30% at one point overnight on some of those memory chip concerns, I guess, but really bubbles. But what I wanted to start off, Tom, is talking about the state of the U.S. economy specifically, and talk about a little bit what's making it up. And I think that we have a manufacturing economy in the United States that is picking up steam, that's still at a lower level than the services side of the economy, but the momentum is very much in one direction versus the services side of the economy is doing well, but there's a little bit less clear direction. And that can often be the case, but we're seeing that especially right now. We did have Fastenal sales report for the month of July. Very much similar to May and June, frankly, running about a point ahead of normal seasonality. Usually July is down about 3%. They were down 2% this time around. Heavy manufacturing continues to perform exceptionally well, lead the charge on a year-over-year basis, up 18%. But non-residential construction doing well also, and there's some easier comparison periods in the back half of the year, which should allow for further acceleration in non-residential construction, which would be really good for a lot of industries and pretty telling. But what's interesting is the heavy manufacturing side that's really picked up. And I think that Fastenal sells into so many different end markets that it's a really good harbinger of what is going on in the economy.
Yeah, I mean, we talked about it a couple of weeks ago. It seems like the steel industry is suddenly starting to become coming out of the mothball, getting refurbished, and suddenly producing results in the U.S. We've seen it just kind of across the board. I'll tell you the headline I saw this morning that I thought was shocking and very surprising was surprising earnings out of Burger King. It sort of seems to me like Burger King and Wendy's have died. They used to be sort of the going head to head with McDonald's, but the same store sales at Burger King up 8.5% quarter over quarter. So suddenly, maybe 90s nostalgia is back. Maybe Burger King suddenly on the rise. There's suddenly some competition out there.
Chipotle was down 10%. I think people are getting a little bit sick of the slot bowls, and they just want the old-fashioned pink slime.
Yeah,
I think they want to go back to that.
But it's pretty interesting. I just thought, man, that's wild. But it seems like there's green shoots everywhere, signs of life where there previously were none.
What's crazy is the greenest shoot right now in terms of consumption is in the lower incomes. Hicks, we have a couple charts on this from Bank of America. The first one shows the payrolls estimate, which has really dramatically improved over the last 6 months, according to Bank of America. But what's interesting here is that the strongest job growth appears to be at the lower end of the income distribution. The middle's getting into a bit hollowed out, like all those white collar entry level jobs, the not necessarily entry level jobs, kind of like mid career, middle management. You kind of in Excel all day. Those jobs are increasingly under threat from AI. I was actually talking to a guy yesterday afternoon who is doing a PhD in math, and he just proved this really complicated like KLS conjecture. They don't even call it theorems. And
I don't even know what that is.
I asked Sam, who majored in math actually here, and he didn't know what it is. But apparently it's something that has vexed mathematicians for decades. And he proved it in 2 weeks with the help of AI. Like he had some ideas, and then he was just using ChatGPT, the premium ChatGPT, and he published a paper on it. And it's caused a massive furor in the mathematics community. Basically, what's the point of what we're doing? Because AI is smarter than us now.
Yeah.
And he said, I got to get out. Like he's started his PhD program, and he's looking to exit the industry. Like, he's talking about going into medicine. He's talking about going into finance. He's talking about doing many things other than mathematics.
I mean, it's interesting because, I mean, I don't know if Obama said it verbatim, but there was the whole, we're shuttering all these industries. They shuttered the coal industry. They shuttered the steel industry in the mid 2000s, and the banner cry was, with these people, we can retrain them, learn to code. Everybody's got to learn to code. Well, now we're seeing the opposite effect, and it's actually twofold. Because one, you're seeing mass deportations, because there's a lot of this talk that Americans don't want to take these jobs. People don't want these jobs. They wouldn't do these jobs. Well, it turns out those jobs are now open because the people occupying them, legally or illegally, are gone, and suddenly they're up for grabs. And there are plenty of people who wish they had them. And they're taking them,
and they realize they don't have the skills.
Yeah, you realize that that manual labor and manufacturing and construction, like, these are viable jobs if you're not competing with people who are being paid a below average wage because they're here on one of the Haitian fly us in visas.
Well, Hicks, let's pull up that chart actually that shows lower incomes are enjoying the highest rate of growth compared to any other income cohort in the United States, according to this Bank of America data, and that's really accelerated dramatically just in the last 3 or 4 months.
I mean, you decrease the supply of people who are willing to work for a below average wage, and guess what? There's going to be more demand for people at a higher income level, and that's what's happening. I mean, that's literally illegal immigration 101. It's the argument against illegal immigration going back to the 40s, and it's obviously working, and you can see the actual fruits of that coming through.
So you have that on the supply side. You have the demand for those types of jobs increasing, and it's really interesting to see the shape of the economy, because we were kind of going back and forth on this internally yesterday. If I proposed the United States is now growing GDP at a similar rate, maybe a little bit faster, but it's based on supply growth. It's supply driven and it's production driven versus demand driven. Does that have the same consequences to inflation that we were trained to think of during COVID? I think that there's this thinking that when GDP goes up, inflation must go up. And I think that is my view, and I think that's just supported by history. If you look back in the 90s, for example, is that is not necessarily the case. When it's a production, certainly the 80s. I mean, look at GDP growth in the 80s and what happened to inflation. Inflation went from 14% to like 3%, and GDP accelerated. So clearly we know that when you improve the production side of the economy, that's actually disinflationary. That's really good quality growth. And I do wonder if we're kind of on the cusp of that. Hicks, we also have a chart on personal consumption expenditures versus private fixed investment.
I mean, in theory, and just to finish that thought in my mind, if wages grow, the population does not, but they grow at a faster rate than the increase of the cost of goods because you're producing them internally. In theory, inflation would be offset by that. Is that not correct? Where in theory, it's like, if I'm not making any more money, but the cost of goods is going up, say goods are going up at 5 and I'm going up at 3, but suddenly I'm going up at 6 and goods are going up at 3, then like the net increase is actually effectively reduced of that inflation.
No,
because your rates of change are it's like Forex. It's like if the yen is going up and the dollar is going up, then there's no change, but it's like if the dollar goes up faster than the yen in theory, then there's actually deflation of the yen relative. It's relative value as opposed to direct value.
Completely agree with that. And I think I would even take it a step further and I would say maybe the yen is actually going down. I mean, to take that analogy, maybe if you build more apartments, yes, that's higher GDP growth, right? But what's going to happen to rent in that scenario? Rent's going to go down.
Particularly if you're reducing the population.
Right.
And you're not printing money to then fill those apartments.
Exactly. And like if we're building more data centers, what's going to happen to the cost of AI? It's going to go down. When we could only build one computer in the United States, IBM could charge tons and tons of money. But when all of a sudden we stood up all these production facilities for more computers, you can now have a computer in your pocket that could have run all the Apollo missions and then some.
But like, think of Meta. It's like Meta right now is going to spend $250 billion in CapEx to build these data centers. But when they stop and they start earning money off of that and they don't have to do that CapEx anymore, that's $250 billion that they could pay to their workers, pay to shareholders, and that enriches everybody, And so that's where like the cycle is tough because there's so much of the, it's like if you build it, they will come, right? But right now we're in the build it phase. Like we didn't, they built the Coliseum 10,000 years ago. People are still making money off that thing, But I bet the CapEx when they built the Coliseum relative to Roman GDP was pretty substantial, but it's paid dividends for, I don't know, how old is it? 1,000 years? I have no idea how old the Coliseum is, but they're still making money on that thing. And the network effect of that, of the tourism and the hotels and the joys of being in Italy have continued to expound for, a millennia. And that's just, and you could, in theory, you could do that with any sort of business production as long as you're actually building something that has value. Building deficits to pay that money out creates no value. There's no Coliseum from checks in the mailbox. There just isn't. But there is potentially from data centers or from, not from unshuttering steel mills and giving people jobs. And I think that that's a nuance that is really ignored in this overall macro landscape. We don't know what inflation is going to do from a supply side change because we haven't done it really since we left the gold standard. So we've had, 70 years of who knows how that works because we don't do it. So that's sort of my thought on it. We'll see, but
I just look at the 80s as a great example of, yes, inflation can come down and growth can accelerate. Those two are not mutually exclusive, and it's interesting because people have been so trained to think that one way.
Yeah,
that's the Paul Krugmans of the world.
Yeah, there's a positive correlation, but it depends on what you're doing. So we'll see.
Speaking of Fed, we had a tweet of the year contender yesterday, and we got to pull this one up, Hicks, from our Treasury Secretary Scott Bessent, and I guess this phrase is being used a lot, but he hit Nick Timiraos hard yesterday, and the reason was. The reason that's being blamed on it is Timiraos said that Bessent is basically manipulating currencies and doing these things. And by the way, it wasn't even because of Bessent. It was because of what was set up before Bessent got in, all these sort of things. Bessent did not take kindly to that. And so he tweeted out, one of the highlights of the Warsh Fed has been watching stenographers posing as journalists. Like the Wall Street Journal's Nick Timiraos, reduced to reporting Fed backroom gossip because they're incapable of performing real economic or monetary policy analysis without being spoon-fed. This is getting a lot of play in financial circles. A lot of people coming out in defense of Nick Timiraos, saying how he's a great journalist and it's beneath this office of the Secretary of the Treasury to write something like this.
The irony is he put out this article this morning, and if you read the sources on it, so he put out an article that was like, Kevin Warsh is constantly on the phone with Donald Trump, and they're just talking like crazy, and that's bad for Fed independence. But if you read it, like it's people close to the matter, many people are saying, one person said that they saw him on the phone with, there's absolutely no hard reporting at all. He's doing exactly what Scott Bessent did, which is he's reporting on Fed backroom gossip. Has Donald Trump talked to Kevin Warsh on the phone? Maybe, maybe not. But the article is rooted in there are people around who are saying that they talk on the phone sometimes.
And even then it says Trump has sought Warsh's counsel on a range of matters, including how the war in Iran and the rapid rise of AI are affected the economy. Like, I would hope that if you're the president of the United States and you put someone in to these offices because you think they're the smartest people out there, that you would listen to their advice and seek their counsel on these sort of things.
I mean, it's not like he's a new person in the Trumposphere. I mean, he was basically second in line to become the Fed chief in 2017. So it's not like he hasn't tapped him before or thought about him as an economic advisor. I'm pulling the other article up. Like, the exact words are, according to people familiar with the matter. That's in the first paragraph. And then a person familiar with conversations insisted the president hasn't broached the topic of interest rates. I mean, it just goes on and on, but each time he references his sources, it's just many people are saying, people close to the matter are saying, and it's like, is this really an article, or is this, I mean, I don't know. I didn't exactly go to journalism school, but it seems like you got to have some sort of actual facts to report, but it's just, and then he goes on to say, basically Joe Biden barely ever called Jay Powell. Well, yeah, no kidding. For weeks at a time, he was just disappeared. I mean, nobody knew what he was doing. It didn't seem like he was signing his own name to a lot of stuff. So who knows what he was doing? But then it's also like, he's like, well, Alan Greenspan is super tight with Hillary Clinton, and that was okay. It's like, okay, well, if, it's barely an article. I mean, I read through it and I was like, what is this? This is conjecture. This is not journalism. It's Fed backroom gossip. Which the irony is that's what he got called out for literally the day before.
Which reduces the idea of trust in the Fed.
Yeah.
The more you spew the gossip, the more you are trying to reduce the credibility of the Fed, something that you hold in such high esteem or purport to hold in such high esteem. So that's going on. It's entertaining as much as anything. I think the practical implication is that Warsh just isn't going to tell anyone what he's going to do. And I think it's frustrating a lot of people in finance. And I think maybe you do have a little bit of a premium in rates right now because of that, a little bit of uncertainty, a little bit of defiance maybe from certain market participants, because I think that what Nick Timiraos does represent is the mainstream of finance, or old Wall Street as it's often termed. So I do think that, but we're going to take advantage of that opportunity. The more that people are saying, oh, we're not going to touch the 30-year bond because Kevin Warsh, we're going to say, well, we'll take advantage of that. I mean, and snip the extra 30 basis points for the next 30 years.
Well, I mean, rates are moving now. We got the jobs report, non-farm payrolls, and it's like, oh, the expectation was for 205 and we got 199. So now the Twitter sphere is like, another strong jobs report, we can hike rates. It's like, okay, well, it was 199 on
Wait,
this
that's not even non-farm. That's weekly jobless claims, right?
Oh, yeah. Sorry, this is weekly. Yeah. So, yeah, it's like we're at 199. Last week, guess what? We were at 197. It's like the number is the same every single week. Do we not, like, we just consistently add somewhere between 195 and 200,000 jobs every single week, and that's not just completely made up? I mean, it's just insane to me that it's crazy. I mean, you look at the continuing claims went from 1,782,000 to 1,801,000. So like, there's only 19,000 people who got laid off in theory. Okay. I mean, like, we're a country of 300 million people. I guarantee you there was more plus or minus than either of those numbers, and the number is much harder to ascertain than let's just rubber stamp the same number plus or minus 2,000 jobs every single week for the next 2 years and be like, jobs market, rocking and rolling, so consistent. I mean, it's just, but that's what's moving rates. Oh man, jobs are strong. We might as well hike rates. It's like, well, are they strong, or are they just made up numbers that we just continue to look at?
And then we look at every headline that's coming out of the Middle East about Iran and Oman. Apparently they have a deal to open the strait. Apparently the inbound traffic's going to go near Iran and the outbound traffic's going to go by Oman, and there's not going to be a toll.
I don't know. We'll see.
But why does it take so long to figure out a path for boats that have been going through this for the last 50 years?
Because you got an unsavory group of rocket firers, and mosquito navies.
It's I don't know. We'll see what happens with that. Oil has been down. It might be going up a little bit now. I mean, and then finally, just on the AI front, Meta did come out with its new AI coding platform called Muse Coding. It apparently is better than ChatGPT and Gemini, although still worse than Claude's Opus. But that's a lot of progress for Meta. And if you think about a company, Tesla was talking about training Grok with how they actually on all the SpaceX data, all the SpaceX engineering data. And so if you think about Meta training its AI agents on how they build code, it would make some sense that their coding agent should do quite well. And then finally, memory providers, again, just crashing. Western Digital reported earnings last night, so did SanDisk. Both of them are getting smashed, down 12%, 6%. 16% actually, excuse me. Revenue growth continuing to do well, but expected to decelerate on a quarterly basis. I think people are just so skittish on memory. I wouldn't read too much into that. But that is going on, which frankly, I would be happy. And I think everyone should be happy if these memory providers start making less money, because when it slows everything down. And this is how economics should work. When the price goes up, demand goes down, and demand is falling for things like smartphones. Apple talked about that. Qualcomm talked about that, and it's gonna slow the growth of AI as long as memory chip providers are, making 85% gross margins on this. So I think it would be a good thing for them to make more normal profits, more competitive profits. Right now, they're just kind of taking advantage of a bottleneck, and I think that bottleneck's going to ease because that's what the market does. So on that note, we will see you tomorrow. It is tomorrow day, so it is burrito time for the boys. Bye.